Kind of looks like Oracle. And kind of looks like Microsoft. Man, I got charts back here from when they had the dinosaurs roaming these things. Like, it's crazy. I'm just trying to clean it up a little bit. Look at me from years ago. That's hilarious. Did you guys see where this line connects? I know it's hard because there's so many lines, but right here, it was acting as support. Right here, acting as resistance. Moves up along, it's acting as resistance. But we're going to expand on this idea. As you can see right here where my cursor is hovering, the dividend payout date for this particular ticker, XLK, is tomorrow. It's not really clear on the date. You might want to check the dividend calendar for this. It's a really small. It's 0.7% distributed quarterly, so you're talking about 0.02% payout on that day, but which is not much. Actually, probably one of the lowest dividends we've seen all day, other than companies that just had zero. So this one's a little interesting. This is an ETF. It represents the United States technology-related assets, which is why you don't see any financials off to the right here. There's no financials. What you could look at is the underlying. So if you go to like etfdb.com, you can type in XLK, and you can see exactly what this ticker is holding. And this ticker is representative of the value of its underlying. So when Facebook pulls back, it pulls back as well. Same thing goes for Apple. When Apple starts to fall off, this will fall off as well. Derivatives, ETFs, specifically in this case. So this specifically represents technology. As you can see, for the past year or so, it's been using the weekly 20 moving average as a support, but it seems to be breaking down a little bit. As we all know, there wasn't the best news headlines today, but we got this new weekly candle that's pushing down below the 20 moving average, which could represent a change in direction here real soon. I wouldn't want to be holding or entering this necessarily. Quite frequently does this ticker take visits to see the 180 moving average. As you can see, it did here in the year 2020. Quick little dip, touched the 180 moving average, went straight back up. Also, I think it's like relatively equal distances. 12.5 from moving average to peak. 22 down. Okay, so you don't want to be holding through that. Also, you can see here in... Damn, there's a lot of lines. That was 2018. Pulled back to the 180 moving average. These things happen quite frequently. And for people who are like spacing their investments out over extended periods of time, like months and years, they may even go unnoticed. But these are pretty big deals. Here's another example in 2015-ish, or 2016, entering late 2015. A little bit of flagging. Again, this is XLK technology. This represents U.S. technology related assets. Eventually getting pretty damn near that 180 moving average on the weekly where it proceeded to go. As of right now, though, it is very overbought. Not only is it overbought, but its RSI is starting to point down. It's doing not so well. Last time we had this, again, 2020, it went all the way down. The RSI touches the 30, this green line here. Could be considered a buy signal. We use these indicators to help identify the best entries and exits for any particular company. It wouldn't be completely unheard of for this to break down. As you can see, there's a Fibonacci circle here. And that's kind of what's been at play for the most part on this ticker. The price channels seem a little less relevant than the Fibonacci circle on this particular ticker. Again, we don't really have financials to know whether or not these investments are panning out or not panning out, whether they're making money or not making money. Because this is an ETF, you'd have to look at the underlyings. And as you might have noticed throughout this video, a common theme has been technology. We covered a lot of technology companies, especially new ones, especially the buzzword ones, especially the ones people are talking about. We covered a lot of technology so far. So that's why I'm covering the technology ETF that relates to all these companies that we just looked at. If we were to segue this a little bit, we then can find a whole asset class that's kind of like a subdivision of technology that you would consider social media or user-generated media. What companies might I be mentioning? This is your FANG companies. You may not have heard FANG in a while, and it's for a good reason, maybe. Who knows? Maybe it's an older generation thing, but FANG. We got Facebook, Amazon, what is it, Netflix and Google. You always hear Wall Street talking about that, for example, but FANG would represent like your user-generated media subsector of the technology market, and we're going to take a look at that real soon. Again, if you guys have any questions, you can always get a hold of me via Discord. You can get to Discord by visiting my website, ethanwrenn.com. From there, you can also see my various social medias. Make sure you're following on all the respective platforms if you want to stay in the loop with all the latest information. Again, Twitch, YouTube, Discord, Twitter, Instagram, Reddit. Make sure to check out my Reddit as well. And yeah, thank you for spending your time. We're not done. We're going to keep going. So transitioning from tech, which we just covered a lot of tech, we're going to go into social media / FANG related tech subdivision.